All right, so let's not talk about J-Signal. Let's do a little quick video for you guys to review on how we caught the exact high on crude oil this morning by using my black charts. Now, the bottom left, like I said, is more volume-based. The big, long chart here is more price-based. So we only have a couple setups we trade off the black charts, okay? It's called a number one and a number three trade. And number one, we're trying to catch the exact high or exact low on a retracement with trend, okay? So that's what we're trying to do. If the moving averages, the first thing you do is you establish trend direction right away, first of all. When you first log in, no matter what, if you're a crude oil trader, that's the first thing you do is establish trend direction immediately so you know your bias. On the bottom right, when you log into Omnivia, this is very important for your success. On the bottom right, under Omnivia, we have a one-page document. It says how to trade the black charts. You can print that out and review that before you log in into the room, and then you'll understand how to do this. It says establish trend direction first. Trend direction is obviously down. Your longer term moving average is the magenta or pink. The shorter term is the white. It's the first thing you do. I don't care where market profile is. I don't care what the market's doing. Turn CNBC off. You don't need to watch TV. Watch a chart. The chart tells you everything. My black charts are the footprint of the market. It tells exactly where the major support or resistance is on a retracement, where to get short or where to get long to the exact bar. Not just, oh, well, maybe it's an area. Either it's a short or it's a long, period. So what we do is we establish that the moving averages were down. Magenta moving average was down. White moving average crossed down. The bottom left chart is more volume based. You can see our profiles was at 52.14 at 52. On more volume base, we only look at the red dots and downtrends. We don't care about these green dots. That's a low value area. That's counter trend trade in the market. We only care about these red dots to short with trend on a snapback. So once it comes within 2 ticks, maximum 3 ticks, you look on my price profiles at 52.11. So I was at 52.11 and 52.14. So as we moved up, to show you how to do this, as we moved up, look at my proprietary Renko bar type. We have 2 specific entry candles that we play off of. Either it's going to be a spinning top or a doji. A doji looks like a cross or a plus sign. I made specifically this bar type to show me when there's a possible top of the market. It's either going to be a doji or spinning top. So when I come within 2 ticks of these red dots on my profiles, I need my Renko bar to pull myself in now. It's not good enough just hitting the profiles. I just don't sell right when I hit the profiles within 2 ticks. I need the market to pull myself in. So as you can tell my Renko bar type, I use the 3-sim Renko to pull in on your own charts, or you can just view my charts in the room. This is my J-signal you're looking at over here. If you look, I got green Renko bars coming up. Green Renko bars, green Renko bars, green Renko bars, green. And then all of a sudden, I'm within 2 ticks of what? 52.11, 52.14. My profile actually called it almost to the exact tick. It does that a lot since we brought this to the room. Some days I'll call it to the exact tick, exact high, high or low. So it's pretty awesome. It just has to come within a couple ticks. It can exceed it. It can just be below it, but it's got to be in a couple ticks. Maximum 3 ticks. Once you get a spinning top or a doji, spinning tops will be in blue. A doji will be a plus sign. You'll want to see a close, the body of the candle close below the low of that doji or spinning top. There's the low of the doji. Your entry bar, this is an exact entry bar system. There's no wishy-washy trading in this room. On my number 1 trades on my black charts, you know the exact bar to get into. Exactly to the exact bar. When you see those traders, Shirley, Dave, that caught the high in this move, they caught that great short this morning, my members, they knew the exact bar to pull the trigger. There's no wishy-washy. If it's closed below the low of that doji, that's your exact bar to get short right there, right when it closes. You can sell the bid to get in that trade right there. Don't do a market order. Sell the bid. Right there's your exact entry to go short to the exact bar without any doubt. That's a highest probability trade right there on a retracement because you're shorting off the black chart. The test of market profile. Now the best one is the first test of these areas. I cannot stress this enough. If you take a second test of this area, so here's a first test, here's a second test, you must have confluence, meaning I at least want 2 times confluence. Both market profiles lined up, my volume and price lined up at 52.11, 52.14. I mean, what more can the market give us? You're taking 2 different profiles and they're matching up the same. I mean, come on. I mean, what more can it just, it laid this one right in front of us. I mean, you got to love this when it matches up. It's one of the highest probability trades you can find with any indicator in the world because it's profiling the market. It's taking the internals of the market and it's spitting out resistance at 52.11 on my price profile, spitting out 52.14 on my volume. That's 2 different profiles how it calculates, and it spits out the same exact resistance. Pretty cool. That's why we have the advantage over our trading opponents. So then when you get short, okay, you don't risk more than 15 ticks per one contract. The key to do well in the futures market is you got to have risk management. You can't risk more than $150 per one contract. A lot of traders risk only $130 per one contract. So you're risking 130 on this trade, 13 ticks on this trade when you get in. Meaning right when you get in and sell the bid, and you're at 52.05, 52.04, let's say 52.05, your stop is right here on your dome at 52.20. Your maximum stop is right there. You cannot risk more. If it hits that 20, you're out. You can't risk more than 15 ticks on the number one. Either my profile is going to call the high and reverse this market, or it's not going to work. And you got to stop yourself out. You can't let it run up and say, oh, I may go to the next profile at 52.75. I'll just add some contracts in here, and then I'll wait till up here. This next profile, it doesn't work that way. Either it reverses at the first profile, or you're going to get killed. So take your small loss if it doesn't work. That's the only way you can make money with market profile. If it doesn't work, take a small loss. And when they do work, you just don't shut it out with 8 ticks and say, okay, I'm short here at 52.05, and let me get out at 52.100 and make, or 52 and make 5 ticks. No, we're not scalpers. I have never met anybody that made money scalping the market. The only scalpers can make money are these algorithms or high frequency algorithms that buy and sell in a nano of a second. But you and I cannot do that. We can't make money scalping. So what we have to do, the only way you and I can make money in the futures market is we got to put ourselves in a position to win. We got to have the edge. Well, the edge is the market profile. That gives us the edge over our trading opponents. We know that. The other edge is not counter trading the market profile. That's the second edge. The third edge is we know the exact bar to get into on a retracement with trend. We know where to get out also. What you have to do, guys and gals, and Gerald, I'll shut this off in a sec, is you got to scale contracts in after you get in. So right when you get in and your maximum risk is 15 ticks, you got to know where to scale out. Now these symmetry dots, if there's any one indicator that we sell, it's for $297, a one-time fee for the rest of your life, is symmetry dots. We have thousands of traders across the world that have the symmetry dots, and the one thing it helps them do is reduce risk. To me, entries are easy. They've always been easy with market profile. The hardest part for me is where do you get out? How do you maximize your runner? How do you maximize your potential profit potential while minimizing risk? These symmetry dots are red. They come up in dots. There's your red dots, and here are your blue dots that pop up. The blue dots indicate where to scale out when you sell. The red dots are where to scale out if you buy. What does that mean? If I'm short at 52.05 and I come down to 51.90 in my symmetry dots, or 51.86, 87, I want to front run that by 2 ticks. So if my symmetry dots are 86, I want to put an order in at 88 to scale 50% of my position. And then when you come to the second set of symmetry dots, you can bail 75%. And then your third set of symmetry dots down here, you can bail 100% or go to your next market profile over here, which we said the ultimate target on this run is 50.67. So scaling reduces risk, because if you're short 6 contracts, you can't hold 6 contracts and say, oh, I'm going to make 52.05. It's going to go all the way down to 51.30. I'm going to make $700 on all 6 contracts. It's great in theory, but the market doesn't work that way. We don't know how far it's going to run. We know the exact bar to get into, my system called the exact bar high again. We don't know how far it's going to run. So what we have to do as traders to make sure we minimize risk and maximize profit potential is we have to make sure we scale at these symmetry dots. And by scaling at them, we scale our contracts down and we let our runner run. But we just don't get in, if you say you get 4 or 6 contracts, or even if you're a 2-contract trader, you don't sell 2 at 52.05, 52.04 and get out here at 51.90 on all of it. Even if you're a 2-contract trader, you sell it at 52.05, you scale half, 1 contract at 51.90, and let the other half go to the third set of symmetry dots if you're in a hard downtrend to try to make a $600 to $700 trade. Because what we're trying to do, guys and gals, is with this system, is we're trying to make an average of 4 to 6 to 1 reward to risk. And this is why we do so well in the room. 4 to 6. This is what separates us from everybody else out there. We're not scalpers. We're not trying to make a tick or 3 ticks or 5 ticks or 10 ticks. We're trying to make $400 to $600 with $100 potential risk. More importantly, if it's a maximum $130 risk, to put it in more practical terms here for you on this trade, if you got short 2 contracts at 52.05, it got as low as 51.30, right? You got a $700 potential with a maximum $130 risk. So it's a 6 to 1. All right, a 6.5 to 1. And that's how you put yourself in a position to win. And you cookie cut this every single day. It's the same exact setup. There's only 2 setups. And number 1, if the moving averages are down, sell the first test of the red dots. First test with a pull-in bar on my Renko bar type within 2 or 3 ticks. Period. You should have an exact bar. Don't risk more than $130 to $150 maximum risk. And then scale out with these symmetry dots and then try to get to the opposite side of market profile. 51.30 hit. Final target should be 50.67 if it makes it. And that's all we do every day. Okay? Number 1 and number 3. So please print that out. Log into Omnivia. Go to the bottom right under Documents. Under Documents, print out how to trade the black charts. Or go to www.daytradingthefutures.com. I have a beautiful video like I just did today. We'll record this and put this on our website so you can review it. So go to www.daytradingthefutures.com. Gerald will put this video up for you to review it. And we got several videos how to trade the black charts on there for your review. Because if you learn how to do this, you're catching the highs and lows on a retracement on a daily basis. Okay? Gerald, go ahead and shut that off. J signal then, let me go real quick with J signal and then we'll shut this off, Gerald. J signal, let's go to J signal. So that's the number 1 trade right there. J signal then, on your own ninja charts, I have my own profile for your own ninja charts. And this is called HVA, high value areas in red, and green is LVA. So it's the same as these black charts, right? The same lingo. Same exact lingo, only the difference in trading the black charts versus trading the J signal charts. J signal, I only have 1 trade set up. It's called a number 3 trade. Only 1 to learn. Here it is right here. With the black charts, I have a number 1 and number 3. With the J signal, I'm trying to catch a lower high or higher low using market profile. And my Fibonacci dots and my Elliott wave with an order flow bar. So this was an exact bar sell with trend also. Right there. That's an exact entry bar trend with J signal. That's a J signal trade. So the difference is the black charts, I have 2 setups to learn. So we have a lot of 2 to 3 year members in this room now. They only trade 2 setups off the black charts. That's it. Off the J signal charts, they only trade 1 setup. My number 3 is the same thing as the number 3 over here on the black charts too to learn. Now, if you go to the bottom right under Documents again, guess what I got? How to trade J signal. So J signal is on the bottom right, and that will teach you right there. You can print that out, how to trade off of J signal. Okay? So make this easy. 2015, it's just going to be a wonderful year if you just pay attention to 1 or 2 setups on the black charts, 1 setup on the Ninja. And we'll do that all in 2015, all in 2016, all in 2017. I mean, it's every year, every day, every week. You don't need to add different indicators to this. You don't need to learn a lot of setups. We don't try to fit indicators in the market. We just trade market profile. In my opinion, nothing beats market profile because it's profiling every major support and resistance, because Active Trader came out and said we're almost 85% is all algorithms out there. Guess what the algorithms are showing? They're showing their footprint. The footprint is market profile. So if you ever meet Peter Stoudemire, you ever talk to Steve? I love talking to Steve. He's Peter's right-hand man. He's the one that invented market profile. You ever talk to him? Shake his hand. Say, thank you, Peter. Thank you in 1985 for bringing price profile. Thank you for bringing volume profile in 1994. Because there's no better indicator that tells us that's profile in the market than that. And I've seen thousands. A lot of junk out there. Moving averages, moving average, convergence, divergence, stochastics, divergence. My God, divergence will get you, you'll get your butt kicked with divergence against trend. The only time I look for divergence is with trend. Only time. So make sure you understand that.